Hello, and welcome to myfinanceteacher.org. In one of the recent videos, we looked at the performance of IAG, Gold, between mid-2016 and mid-2020. In this video, we continue that same discussion in relation to EGO, Eldorado Gold. What I'm going to do is compare the fundamental valuation I have in 2016 versus that valuation in the middle of 2020. And what this model actually shows is the per share value of the reserves and resources in the ground after extraction costs, after long-term debts. And all of that discounted, usually at a discount rate of 5% over the average mine life, plus a little bit of a secret sauce on insider shares. So I see this as basically a fundamental value of what the company has underground. But the actual market price can actually differ from that valuation for a number of factors. Some of those factors are also actually fundamental, such as, for example, the way that the management will run the company, will they dilute the shares in the future, the jurisdictions that the company has property in, and so on. And some of those factors are not really fundamental, such as market sentiment, specifically in relation to precious metals. So I wouldn't take these valuations as a precise measure of where the price should be expected on any given week or even on any given month. Rather, I would look at this valuation as where the price might tend in the longer term if, and that is a big if the management doesn't muck up their job. So let's have a look at the details between mid-2016 and mid-2020. In that same time, gold price has actually increased by nearly 50%, from around $1,370 at the peak to around, let's say, $2,050 near the peak of 2020. The proven and probable reserves in the ground of gold and silver, where there is a gold-silver ratio of 80, has actually decreased substantially in the same period, from 25.7 million ounces down to under 9 million ounces. One of the reasons for this substantial decrease, I think, is the sale of their mines located in China. At the same time, measured and indicated resources have actually increased substantially. Half of those resources was 4.3 million ounces back in the middle of 2016, and it was 14.5 million ounces in the middle of 2020. The all-in sustaining costs haven't really changed substantially. Those are around $930 per ounce. In these years, the company has paid quite a lot of its long-term debt, which decreased from around $591 million down to about $380 million. And also during this period, the company actually had a reverse split of 5-1. As far as I remember, that was somewhere around 31st of December of either 2017 or 2018. So taking into account that reverse split, the company has actually increased the amount of shares outstanding by 21%. So the management has actually diluted the value of shares here a little bit. Talking about the insider shares, I didn't actually find the information for mid-2016, so I just put 0.16%, which is the same as it was in the most recent report from Q3 2020. So we assume there is not much change here between 2016 and 2020. And the average mine life here is the total resources and reserves divided by their annual production, giving us 51 years in mid-2016 and around 43 years in mid-2020. Although a decrease often might seem negatively by many investors, I see it as a positive sign because we do already take into account the value of the reserves in the ground, and the mine life here just means that the discounting factor over the shorter period is not going to be as important. So the coloring here in the third column shows whether the change has been a positive or negative one, regardless of the actual mathematical sign. For example, a 1% decrease in all-in sustaining costs, although mathematically it is a negative 1% change, that is actually a positive news, so green color here. Plugging all these numbers into the valuation model gives us a valuation of only about $6.4 per share. That's when the number of shares outstanding was quite high at nearly 717 million shares. And if I got my historic market price correctly, near the peak in the middle of 2016, the share price of EGO was around $25. So as you see, quite a high overvaluation over here. So at that time, it wouldn't usually be a great idea to invest into those shares, especially at that peak, with such an overvaluation of nearly 4 times. Plugging the numbers from mid-2020 into the model gives us an amazing valuation of $94. That's with much fewer shares outstanding. But the market price was only about $14.3 near the peak in 2020. So while gold price increased substantially, and the valuation shown by this model has also increased by a factor of around 14, the share price has actually suffered quite a lot. It dropped by 43%. So what are the possible reasons here? Admittedly, one of the possible reasons is that perhaps this model doesn't include all of the relevant fundamental information. So perhaps a more closer look at all of the news releases from the company can discover something else that might be important. On the other hand, another potential reason for this substantial decrease is a very strong drop in the market sentiment. And just like we did for IM Gold, let's have a look at some sort of a measure for the market sentiment in relation to Eldorado Gold. What we have here is a weekly price of EGO. That's the blue line. The gray line underneath is the 4-week average of that price, or think of it as 1 month's average of that price minus 1 standard deviation. And the brown line above is that same 4-week average, 1 month's average, plus 1 standard deviation. When the price, the blue line, is at least 1 standard deviation above its average, you might say that the sentiment on the markets are quite high, possibly a little bit greedy if the price is far above the average, much more than 1 standard deviation. If the price is below the average by at least a standard deviation, or even much lower, then you might say that the sentiments on the markets are quite low and possibly even fearful. What we see from this chart is in the first half of 2016, the price was very often close to the upper line, and it has actually poked above that upper line over a number of weeks in the first half of 2016. And even in the second half of 2016, with that decline into the intermediate cycle low in precious metals, the price did come close to the higher line in at least 1, 2, 3, 4, 5, 6, 7, 8 weeks or so. So the summary from this chart is that back in early to mid-2016, the sentiment on the markets, at least particularly in relation to Eldorado Gold, were quite high, possibly a bit on the greedy side. And that's partially shown by the difference between the market price and this fundamental valuation of the resources in the ground. Next, let's have a look at the same chart for 2020. Blue line is again the actual weekly price. The gray line is the 4-week moving average minus 1 standard deviation and plus 1 standard deviation on the top. What we see here is the price is actually never even beyond halfway to that higher line. All through 2020, the price has stayed in the lower part of this channel and even has poked multiple times below that channel. So one way to read this chart would be to say that for some reason market sentiments on Eldorado Gold in 2020 were actually quite low, possibly even sometimes fearful. And what's puzzling is that this sentiment actually took place at a time when gold price has performed really well, breaking above $2,000. To be honest, I really would like to know if it's something particular about Eldorado Gold or if it's a general sentiment about gold miners. So if you have any thoughts to share on this topic, I'd be very interested to read those in the comments. Talking about the miners in general, I think GDX wasn't suffering as much from the general low sentiment on the markets. Blue line over here is GDX, going back to the beginning of 2016 to the beginning of that bull run. And the purple line is Eldorado Gold. What we see here is that in the first half of 2016, EGO and GDX actually had somewhat similar performance, both rising by around 120% or even more. But since the middle of 2016, Eldorado has actually underperformed GDX quite substantially. So perhaps the low sentiment is something specific to EGO, because GDX doesn't seem to have suffered as much. Comparing GDX, for example, to gold price, again, blue line GDX, purple line gold price. GDX has actually performed much better than gold price during the same time since the beginning of 2016. In this same time, gold price is around 70% up, whereas GDX is around 170% up right now. So in summary, at least one of the reasons for such a drop in market price between 2016 and 2020 on EGO is substantially lower market sentiment. But there is still a chance that another part of the story is some fundamental changes that are related particularly to this company. For that, of course, a more thorough study of all the news releases would be required, and of course, lack of time might become an issue here. So again, if you have any thoughts on IAG, IM Gold, or EGO, Eldorado Gold, share those in the comments below. For now, I wish you a nice day and good luck in your trades.